VeChain just tapped the exact same demand zone that triggered its 2021 parabolic rally. We're talking about a macro level that hasn't been touched in 5 years, and right now, while everyone's distracted by Bitcoin's latest drama, VET is quietly building a structure that could send it toward 10 cents. But there's a catch: miss this support level, and the entire bullish thesis collapses. Plus, CEO Sunny Lu just dropped a staking model that's turning VET into tradable NFTs, and nobody's talking about it. Stay with me because the next 90 days could define VeChain's entire cycle. Welcome back to the channel, Crypto Fam. If you're tired of missing the early signals while everyone else is already loaded, smash that like button right now and subscribe with notifications on. We're diving deep into technical setups, on-chain data, and the kind of analysis that actually makes you money. Let's get into it. VeChain is sitting at 1.6 cents right now with a tiny 0.24% pump in the last 24 hours. Nothing crazy, right? Market cap is $1.45 billion. Volume is hovering around 40 million. On the surface, this looks like your typical sideways altcoin slowly bleeding into irrelevance. But that's exactly what they want you to think. Because underneath this boring price action, accumulation is happening. And according to Crypto Pulse, a well-known crypto analyst, VET has a habit of doing this, going completely sideways for months, lulling everyone to sleep, and then exploding into vertical price discovery when nobody expects it. Here's why this matters. VeChain isn't some meme coin gambling on hype. It's an enterprise blockchain solving real-world problems: supply chain management, logistics, carbon tracking, the stuff that actually generates revenue and partnerships with billion-dollar corporations. So when price action stagnates like this, it's not weakness. It's a coiled spring. Now, let me show you something that should make your palms sweat. In October 2025, VeChain revisited a macro demand zone that last appeared in October 2020. You know what happened after October 2020? VET went parabolic, surging from $0.009 to over 28 cents by April 2021. That's a 3,000% move. And right now, we're sitting in the exact same accumulation range, between $0.009 and $0.013. But here's where it gets spicy. Analysts are saying that as long as VET holds above $0.013, this level confirms a structural floor, a foundation, a launching pad. But if we get a monthly close below $0.009, the bullish thesis dies on the spot. Poof. Game over. So we're literally at a make or break zone right now, and most retail investors have no idea this is even happening. So, the monthly chart is showing a strong lower wick, which basically means buy orders are absorbing selling pressure at these lows. Smart money is accumulating while, retail is bored and chasing dog coins. Classic. The resistance levels to watch are between 3.5 cents to 5 cents, and if VET can reclaim those, we're looking at a potential run toward 5 to 7 cents by the second or third quarter of 2026. And if momentum really kicks in, 10 cents becomes the psychological magnet. According to Crypto Pulse's analysis, VeChain is entering a reaccumulation phase identical to what we saw in 2020 and 2021. This means we could be stuck in sideways chop until April 2026 and then boom. Breakout city. The key signal to watch is a clean break above 3.5 cents. That's when altcoin season starts knocking on the door, and VET could lead the charge. Now, my take? This is textbook Wyckoff accumulation. You've got the spring into the demand zone, absorption of supply, and now we're building a cause that could justify a massive effect. The longer this base takes to form, the more explosive the move will be. And here's the kicker nobody's mentioning. On-chain metrics are showing increased VTHO consumption. That means network activity is rising. Real utility is expanding. This isn't speculation anymore. This is adoption quietly ramping up behind the scenes. Let's talk about the game changer. Sunny Lu, VeChain's CEO, just revealed a new NFT staking model that's about to flip the entire narrative. Traditional staking is boring. You lock up your VET in a wallet, it validates transactions, and you earn rewards. Cool. But VeChain just weaponized that process. Instead of just locking VET, the new system mints an NFT that represents your staked amount and duration. Think about that. Your stake becomes a tradable asset. You can use it in DeFi protocols, transfer it, or sell it without unstaking. This is genius. Here's why this matters. The NFT serves as on-chain proof of your stake, which means it's composable across the entire ecosystem. You're not locked into illiquidity anymore. You can have your cake and eat it too, earning staking rewards while maintaining flexibility. And, for the network, this creates a layer of economic security. Bad actors would need to control a massive amount of staked VET to even attempt an attack, which becomes prohibitively expensive. But wait, there's more. The staked VET represented by your NFT is used to select node operators. The more VET you stake, the more influence you have in choosing reliable nodes. This turns staking into governance without the typical DAO chaos. It's elegant, it's functional, and it incentivizes long-term holding because you're literally helping secure the network while earning passive income in VTHO, the gas token that powers every transaction on VeChain. Okay, let me break down the flow because this is important. You stake VET, and then you receive an NFT. That NFT is actually tradable and usable in DeFi. Plus, your staked VET helps select node operators. You also earn VTHO rewards, and the network becomes more secure as a result. So, this isn't just a staking upgrade. It's really a complete reimagining of how proof-of-stake systems can function in a real-world enterprise environment. This NFT staking model was announced in July as part of the Renaissance 2025 initiative, specifically during the Hayabusa phase, and here's my expert opinion. This could be the catalyst that separates VeChain from every other enterprise blockchain. While Ethereum deals with gas fee chaos and Solana battles network outages, VeChain is quietly building infrastructure that corporations actually want to use. The NFT staking isn't a gimmick, it's a moat. Now, combine this technological advancement with the technical setup we discussed earlier. You've got a macro demand zone retest, increasing on-chain activity, a revolutionary staking model, and a price structure that mirrors the exact accumulation pattern from the last bull run. If you're not paying attention to VeChain right now, you're going to be the person asking, why didn't I buy at 0.016 when it's trading at 0.08 next year? Right now, we're in the quiet phase where smart money is slowly loading bags without moving the market. Retail shows up when the price is already up 300%, wondering if it's too late. Don't be retail. The roadmap is clear. Hold above 0.013. Watch for a break above 0.035. Target 0.05 to 0.07 by mid-2026. And if momentum carries, 0.10 becomes the psychological destination. But this isn't financial advice. This is pattern recognition based on historical data, on-chain metrics, and fundamental developments. You need to do your own research and decide if this fits your risk tolerance. Alright, crypto fam, that's the VeChain breakdown you won't hear anywhere else. We covered the macro demand zone retest, the technical levels to watch, and the revolutionary NFT staking model that could change everything. If this analysis helped you see something you missed, do me a favor, hit that like button and drop a comment with your VET price prediction. And if you want more deep dives like this, check out the video popping up on your screen right now, where we break down the next altcoin ready to explode. Subscribe if you haven't already because we're just getting started. Let's build wealth together. Before you go, quick reminder. Cryptocurrency is volatile and risky. Never invest more than you can afford to lose. This video is for educational and entertainment purposes only, not financial advice. Do your own research, understand the risks, and make informed decisions. See you in the next one.